Welcome back to the Daily Crypto Roundup. It has been another tense and emotional 24 hours across the crypto market, and today we're going to unpack everything that's been happening. The sharp downturn in prices, the analysts stepping forward with warnings and opportunities, Bitcoin slipping below 95,000 and struggling to regain momentum, the liquidity issues still haunting the market after last month's crash, and the broader technical outlook that's raising questions about what comes next. We're also going to look at the developing death cross pattern people have been talking about, the extreme fear gripping the market, and what it means for anyone holding spot positions right now. And at the end of the episode, we'll go over how this week has really played out, what the sentiment is moving into next week, and what the analysts believe we should be keeping an eye on. Before we dive in, make sure you're following the show on Spotify and leave a 5-star rating. It genuinely helps the podcast grow, and more importantly, it means you never miss an episode when the market gets chaotic like this. Right now, updates matter, and being plugged in matters even more. Let's get into the coin prices as they stand right now. Bitcoin sits at $94,304, failing to reclaim the 95,000 line despite several attempts throughout the day. Ethereum is holding just above $3,100, showing a bit of resilience in comparison. Binance Coin trades at $920, staying relatively stable compared to the rest of the market. Solana is at $137, still showing a strong long-term structure even if the short-term volatility has been rough. XRP is at $2.21, edging lower alongside the rest of the market but not collapsing. Cardano sits at around 48 cents. Dogecoin trades at 15.6 cents, following the broader slump. Avalanche is down at $14.95, trying to build a floor. Polkadot sits at $2.75. And Chainlink rounds out the top 10 at $13.65. Let's move into the biggest stories of the day, and we'll start with the heavy one, the major market plunge and the commentary coming from well-known figures like Michael Saylor and Eric Trump. Both weighed in earlier today as Bitcoin and Ethereum fell sharply, and sentiment worsened. What's interesting about this moment isn't just the price action, but the tone shift from analysts. Saylor made it clear that corrections like this are where long-term opportunities historically form, but he didn't try to sugarcoat the short-term fear either. On the other side, you had Eric Trump bringing attention to the broader macro tension and political uncertainty, which is feeding into risk-off behavior across markets. This is one of those rare moments where both the crypto-native voices and the outside political voices are echoing the same thing. Uncertainty is driving the market right now, and that uncertainty is weighing heavily on investor confidence. Linked tightly to this is another major story today. Bitcoin moving closer to forming a death cross, with its 50-day moving average approaching a downward crossover of the 200-day. Historically, death crosses have been mixed indicators. Sometimes they mark the beginning of deeper corrections, and other times they appear toward the end of a downturn, right when the market begins to stabilize. What's notable today is that traders are watching this level closely, because the timing coincides with Bitcoin struggling to reclaim 95,000. Every time the price tries to push above that line, sellers show up quickly. That doesn't necessarily mean we're heading into a prolonged downturn, but it does tell us that confidence is shaken. And whether traders admit it or not, psychological levels matter. 95,000 became a psychological anchor, and dropping below it has had a noticeable effect on sentiment. Before we continue, we'll take a very quick pause for today's sponsor. Stick with us. We'll be back in just a moment.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Right, let's get back into it. Another significant story today comes from deeper market analysis, where several reports pointed out that crypto liquidity remains hollow after the October crash. This is something traders have been feeling even if they haven't been explicitly talking about it. The order books just aren't as thick as they normally would be this far into a cycle. When liquidity is thin, even moderate selling can drag the market down faster than expected. And that seems to be exactly what we're dealing with now. The October crash drained a huge amount of confidence and wiped out a major portion of leveraged traders. The problem is that liquidity hasn't come back at the same pace that prices tried to rise. Analysts are warning that this hollow liquidity environment could trigger sharper intraday swings for the rest of the month, even if the broader trend stays intact. The thinning liquidity makes the entire market more fragile, but ironically, it can also make recovery moves sharper once sentiment flips. Let's tie that into the weekly technical outlook, because today's analysis was blunt. Selling pressure across major cryptocurrencies remains relentless. We've seen small rebounds here and there, little 10% lifts on certain altcoins, quick wicks upwards and intraday surges, but none of them have stuck. When you zoom out on the chart, everything still tilts downward. The momentum indicators are cooling, and the volume profile shows fewer enthusiastic buyers stepping in compared to earlier this year. None of this is a surprise given the macro environment, but it reinforces a key point. The market isn't trending, it's searching. It's waiting for a catalyst, and until that catalyst comes, we may see volatility continue in both directions. That brings us to another major story today, which is the broader trading update. Bitcoin is consolidating below $95,000, Ethereum is holding above 3,100, and most of the top caps are following those movements. This consolidation isn't necessarily bullish or bearish, it's more like the market catching its breath. But what analysts are focusing on is what's happening beneath the surface. Sentiment is weakening. Traders aren't rushing in to buy dips with the same energy they had earlier in the cycle. People are waiting. They're nervous. They want confirmation before they put more money in. That lack of confidence is exactly what we saw in previous cycles during periods of uncertainty. It doesn't mean the market is doomed. It means the market is cautious. That caution is reflected directly in the fear and greed index, which has slid firmly back into extreme fear. Every time Bitcoin fails to reclaim a psychological price level, that reading dips further. And right now, traders feel like they're watching a slow-motion replay of the same correction that started weeks ago. But there's something important to acknowledge here. Extreme fear has almost always aligned with value opportunities. It doesn't mean you buy blindly, and it doesn't mean the bottom is in. But historically, when fear reaches these levels and stays there, long-term holders who accumulate across these zones have seen some of the strongest gains afterwards. And if you're sitting there listening to this, worried about your portfolio, or frustrated with the constant red candles, you're not alone. Everyone in the market is feeling this right now. It's one of those moments where people need reassurance, where we remind ourselves that these cycles test conviction, they don't erase it. We're all riding this out together. Another story worth highlighting today is the on-chain analysis pointing out that Bitcoin's current supply structure is eerily similar to pre-bull phases of past cycles. The same accumulation patterns, the same long-term holders refusing to sell, the same exchange drawdowns, all of those indicators are lining up again. And that's where the bright spot comes from today. Underneath the volatility, underneath the fear, underneath the red candles, the long-term players are behaving exactly as they always do, before supply shocks kick in. That's important. It doesn't override the short-term fear, but it gives the market a deeper foundation. When supply tightens at the same time sentiment recovers, that's when you see those sudden upward moves everyone loves to talk about after the fact. Another key story today is that Bitcoin, Ethereum, and XRP all experienced sharp drops as investor sentiment soured and speculative flows faded. This wasn't isolated to one coin or one narrative, it was broad. Everything fell together. When that happens, it usually signals macro stress or liquidity concerns rather than project-specific issues. And that's exactly what this looks like, a market-wide contraction of appetite. But even in that contraction, you can see resilience in the projects that have actual utility, strong development, and real long-term backers. Those are the ones holding their structure the best, and that's worth paying attention to. Let's wrap up with how the week has gone. This has been one of the most emotionally draining and technically complex weeks the market has seen in a long time. We started the week with Bitcoin fighting to reclaim the 100,000 level, and failing. We spent days watching ETF flows shift from confidence to caution. We watched liquidity diminish. We watched the fear index tumble. And we watched traders go from optimistic to defensive in a matter of hours. But the story of the week isn't collapse, it's recalibration. Markets don't move in straight lines, they move in waves. And this week, we hit a cold wave, a fearful wave, a defensive wave. But that's exactly where new opportunity forms for people patient enough to recognize it. And next week is going to be critical. Not because we expect a dramatic reversal, but because the market is hunting for direction. If ETF outflows slow, if Bitcoin stabilizes above certain levels, and if sentiment shifts even slightly, we might begin to see the start of recovery momentum. If not, then we're likely to see more of this sideways to down movement until the macro picture clears up. Either way, we're all in this together. Everyone in the market is feeling the same uncertainty, the same frustration, and the same questions about where this goes next. And that's why we're here. To break it down, keep it simple, keep it honest, and keep you ahead of the noise. Make sure you're following the show, leave that 5-star rating, and as always, we'll see you at the top.